Hi guys, welcome to the second episode of Scalp video. I'm also currently live trade. I don't know what will happen with that, but let's just leave that to a side. So on the first video I explained to you about the core concepts of the Scalp. I hope you guys have gone through that video. So today we will discuss about ORBs, right? What's ORB? What's the opening range block? And how do we basically trade from there? Let me just set an alarm. Right, okay, so how do we basically trade from there? So as I told you, ORB basically means the opening range block, which we have set up to the first 15 minutes of the time frame after New York Stock Exchange market, right? So basically it's 2:30 to 2:45 p.m. London time or UK time, or 9:30 to 9:45 a.m. New York Eastern time. Now, what the basic idea about this is, so let me just off the session volume indicator, which I will explain to you in the next video, right? So our basic idea is to see price action trade within a specific range that's within the New York Open Stock Exchange, and then for the price to sweep one side, react at a specific key level, and then go up. And then if the price is ranging here, goes up, reacts at a specific key level first, and then you try to catch the reversals. So it goes without saying, the whole idea here is that you wait for the breakout from a range and then price to tap back and continue going up, or you expect the price to go down, right? So it's the same way the other direction as well, right? If you're expecting price to range between the M15 ORB and then you expect the price to break up like this, you anticipate the price action to reverse, right? It's the same thing as an accumulation, manipulation, distribution, or a build up, inducement, mitigation, and then expansion, right? Lit concepts, ICT concepts, or whatever it is. Sometimes price can also do this. Now, so these, whether a reversal or whether a continuation, will depend on where your key levels are, the key levels which I discussed, also depending on where your session volume profiles are, which I will explain to you on the next episode, right? So going back to this episode, so this opening range block, this M15 candle is marked by the low, right? Because the ORB low, and the high is marked as ORB high. So we are waiting for a breakout. So what do I mean by breakout is I at least want to see a breakout on the M3 time frame, right? M3 time frame. So this is yesterday's price action. I'm not hand picking stuff here, right? This is yesterday's price action, and so as you can see, this is when an opening range block is formed at 2:45 UK time. So low is formed here, high is formed here, and once you see a candle closer below, now is the time for us to anticipate, okay, now we have a breakout of the range. Are we looking for a pullback? Are we looking for a pullback and continuation of sales down, or are we actually looking for reversal, right? That's the whole idea here. So what happens yesterday? Price ranges and then drops down, taps into a fair value gap, and then creates a, right, sweeps this low, breaks above this as well, so creates a new high, and that's when you realize, okay, the price is going up, right? So you can trade up to this New York Open high, or the M15 opening range block high, or the fair value gap over here, right? So that move is what you want to capitalize. So entries you can look on M1 time frame, whether it's the inverse fair value gaps you utilize, right? When this beautiful M1 fair value gaps get disrespected, you can enter off that, or you could also beautifully interrupt this M1 FEG as well, right? So it all depends on whether a key area is there, whether the price drops out of the opening range block and pushes price up, right? Now if we open the session volume profile, which I will explain to you later, right, you can see this is the key median, right, where the price have almost ranged throughout the whole day, right? It's also called the point of control. Anyways, I'll explain that on the next video. Okay, I hope that made sense. Now let's go over another video, another example, so that you would be able to understand. So let's go ahead with this example over here. Right, so you have the opening range here 230, right? You have the opening range here 230. So what do we also need to know? If there's any fair value gaps, whether there's any session highs or lows. So you have the opening low over here, right? Is that a fair value gap? Yeah, that is one small fair value gap as well, right? So you can mark the M15. You could also switch to the 1 hour if you want, and check whether if there is any key levels over there as well, right? So because there's nothing there, so you stick to your M15. Now you have that M15 over there. If you switch to the M3, now we are waiting for an opening range block to form, right? Perfect. Now you have the high form, we have the low formed here. Now either we expect for the price action to break above or break below, right? Simple as that. So we patiently wait. Now you see price breaking below, right? Price breaking below. Now what do we expect? Reacting at this key level as well, right? M15. Now we expect for a reversal, so we're patiently waiting for some sort of confirmation. Now you can see there is a new high being formed, and on M1 you can see inverse fair value gaps, right? You have to check for any inverse fair value gaps over here. You can see over here. So this was a valid setup for buys on that day, right? So if you can remember, that price action swept below, but when you enter over here with a 1-to-1 R, that's it, right? That's why we always target 1 hour, and that's why I've explained to you on the beginning video as well, right? In the intro video as well. Anyways, so that's one of the other key factors which you need to keep in mind, right? Now in addition to this, you will also utilize the volume profiles. Let's go through another example. That's the Friday. But before that, let's just check our trade. Oh, perfect. And that's TP, yeah. Right. Okay. So let's get back over here. So this is Friday, right? Can run the price action. So price action is ranging between this candle. So either what we would expect is either for the price to break up and push the price up, or for the price to break up and push the price down, right? Or the price to go down, do this, go up, right? Simple. There's only 4 scenarios which you can think. So when one high gets swept, then it's going to be a bit obvious, isn't it? So that's why you need to look for any key areas, key levels to look. Okay, is price action reacting from any level? So let's switch to 1 hour, right? So you can see over here these previous swing lows have been swept, right? So, and then if you go to M15, right, M15 we're looking for price to break up or down. So you can see here there is no specific key level for us to react. Okay, let's mark this as well. M15 fair value gap. We also have an M15 fair value gap over here, but we also have these highs to target, right? So if this doesn't give us a good reaction, we could expect buys until this M15 fair value gap, right? So switch to M3, we wait for a breakout patiently. We can on the indicator as well, session volume. Now you can see here price reacting beautifully for the low volume profile, right? Session, that's a support, and we have a point of control here, and then resistance up to here, or high volume over there. So you can trade until there. So if it goes up to there, we can look for a reversal. So you look for a breakout. Now you could see a 3-minute breakout from here. Now you just have to look on the lower time frame where the price action respects it or reverses it, right? And what did you see that day? If you can remember the price action, right, price extended from here all the way up to here, and what have I told you? We need to wait for a clear inverse fair value gap, right? And when do we get that inverse fair value gap? Price reacts at the M15, which we marked. There is no source of FVG until we clearly mark and identify this region. Understand, there's no inverse over here. Price pushes back, sweeps internal liquidity. That's why I said patience is important, right? And then once this breaks out, you just enter into a simple 1:1 trade, and you utilize these key levels, the session volume profiles, as well, trading into it, right? Understand the whole point of trading this. It's not for you to expect a breakout as soon as possible and then enter into a sell immediately, right? Wait for a key level, wait for structure, order flow, wait for inverse fair value caps, wait patiently, and then just catch one single move, right? 1 hour, that's all you need. Okay, so this is quite a bit of a short video, but this is just me trying to explain to you guys, holy moly, right? That was a big move. Anyway, this is just me trying to explain to you guys about how to emphasize the importance of M15 fair value gaps, opening range blocks M15, having a breakout, and whether the price would go up or down. So once again, to summarize, you have the range here. This is one scenario, or this is the other scenario, right? Simple. So you got two scenarios, whether depending on where the market breaks out, right? So you have the other one here. If it pushes like this, you've got that, or you've got this, right? So it all depends on key levels, timing, as well as session volumes, high and lows, right? Cheers guys, I'll meet you next time with the next video to explain to you about session volume profiles indicator, and then one final video to wrap all things up. What I want you guys to do is go back test, mark the key levels, mark the opening range blocks, and back test or forward test, or at least in hindsight, to check how price reacts from different areas and how this strategy works in the last 30 days of price action, right? And let's see how many of you get back to me with the proper data. Cheers, see you soon in the next video.